Welcome back to TalkTickers, the show where we help you understand what's really going on in those earnings calls. Today, we're going to be taking a deep dive into Best Buy's Q4 2025 earnings call.
Looking forward to it.
All right, so Best Buy, they just finished up their fiscal year, and at first glance, things are looking pretty good. They managed to beat what analysts were expecting for both sales and earnings for Q4. And get this, they actually pulled off some growth, with comparable sales up by 0.5%.
Impressive.
Yeah, and their operating income rate, which is basically, how much profit they're making from their core business, that came in at a pretty solid 4.9%. But here's the thing. Even though the results seem positive, the company's stock is actually down.
Interesting.
Yeah, it seems like investors might be a little spooked about something.
Yeah, there's definitely some uncertainty in the air. We should try to figure out why.
Exactly. So let's unpack this a bit further. What were some of the things that kind of jumped out at you from this earnings call?
Well, one thing that really stood out to me was Best Buy's digital performance. I mean, they reported that almost 40% of their sales in the U.S. happened online.
Wow, 40%. That's a big chunk of their business.
Yeah, and on top of that, their app was the #1 app on the Apple App Store on Black Friday.
So basically, they are really nailing that whole omnichannel strategy, huh?
It seems so, yeah. Blending the online and in-store experience, it looks like it's really paying off.
It's definitely a whole different world for retailers now. It's not just about wandering the aisles anymore, huh?
Right, and Best Buy seems to be really adapting well, but they also talked about, how important their customer relationships are and, how they work hard to create a good environment for their employees. Actually, they said they had the lowest employee turnover in 6 years, which is pretty impressive considering how tough it is to find workers these days.
It's true. Happy employees usually do mean happier customers. But let's get back to those numbers for a second. We saw that some product categories did better than others. What's the story there?
Yeah, so computing and tablets were the clear winners. Laptop sales in particular went up a huge 10%.
Wow.
It seems like, even with all the economic uncertainty, people still really need their personal computers. But on the other hand, sales of appliances, home theater systems, and gaming, those all dipped a bit.
I wonder what's behind that.
Yeah, it's a good question.
Is it just a temporary thing, or is there like a bigger reason?
Well, the CEO mentioned that, there's an uneven economic environment and some pressure in the industry. But, I think there might be more to it than that.
Okay, so industry pressures. What does that even mean?
Right.
How is Best Buy, getting ready to deal with these problems?
Well, one thing we can't ignore is those tariffs.
Oh, right, those tariffs.
Best Buy figures that if these tariffs on Chinese goods stick around, it could cost them a whole percentage point in comparable sales.
Ouch, that's got to hurt.
Yeah, it's a big deal.
So what are they going to do about it? Just accept the hit? Or do they have other options?
No, they're not just giving up. They mentioned a bunch of different strategies, like maybe changing up their supply chain, maybe negotiating with their vendors, and even maybe adjusting prices a bit.
Sounds complicated.
Yeah, it's tricky. Lots of moving pieces. It'll be interesting to see how they actually handle it.
Definitely. Okay, speaking of tricky, let's talk Best Buy Health for a second.
Yeah.
They had to take an impairment charge and change their outlook for that part of the business. What happened there? Was it just a little hiccup, or is this like a sign of some bigger issue?
Well, it seems like that whole home healthcare market, it's not growing as fast as they thought it would. They're still committed to the idea, but they're definitely adjusting their strategy and what they expect to happen. It just goes to show that even for a company as successful as Best Buy, not every gamble pays off.
That's a really good point. Even the best companies, they make mistakes and got to adjust course sometimes. But, overall, sounds like Best Buy is holding up okay in a pretty challenging environment.
Yeah, I'd agree with that. They're adapting to how retail is changing. They're putting money into the areas that are growing, and they're being smart about how to handle risks like those tariffs. But the question now is, what's next?
Right, what's next? So let's dive into their game plan for the coming year and see what they have up their sleeve. What are the big things they're focused on?
Well, they've got 3 main priorities. They want to make that whole omnichannel experience even better. They want to start and grow some new ways to make money, and they want to make everything run more efficiently.
Okay, so break it down for us. Let's start with the omnichannel experience. What are they doing to blur the lines between shopping online and in the store even more?
Think like super personalization and making things easy for the customer. So imagine AI-powered search on their website and app, getting recommendations that are actually relevant to what you've bought before, and even, get this, influencer storefronts.
Wait, hold on. Influencer storefronts, what does that even mean?
I know, right? It's pretty cool. Imagine your favorite, tech reviewer. They get their own little shop on Best Buy's website where they showcase all their top picks. It's a really clever way to get new kinds of customers and get them onto their platform.
I like it. It's outside the box thinking for sure. But what about their actual stores? Are those being forgotten in this whole digital first world?
Not at all. They're being really strategic about their physical stores. Instead of doing massive renovations everywhere, they're focusing on specific updates and creating special experiences within the stores.
So maybe dedicated areas for when new tech comes out or, better partnerships with brands like Apple and Microsoft.
Exactly, yeah. They want their stores to be places you actually want to go to, not just somewhere to buy stuff. They're also teaming up with vendors to, create those cool interactive experiences and show off the newest innovations.
So it's all about making the shopping experience really smooth and enjoyable, no matter how people choose to shop, right?
You got it. All right, now let's move on to their second big goal. Launching and growing new ways to make money. This is where things get really interesting.
Okay, I'm all ears. Spill the beans. Are they going to start selling NFTs or something?
No, not quite. But they are venturing into some pretty cool new territory. They're launching a Best Buy marketplace mid-year, which is going to let other sellers put their products up on Best Buy's platform.
So they're going head-to-head with the big guys like Amazon and Walmart.
Yeah, it's a bold move.
What makes them think they can compete with those giants, though?
Well, they're counting on the fact that people trust the Best Buy brand and that they already have a bunch of loyal customers. They figure people will like the convenience of buying from, a trusted source like Best Buy, even if the product is technically coming from a third party.
Makes sense. They've got a good reputation, and that's definitely worth something these days.
For sure. And it's not just the marketplace. They're also growing their Best Buy Ads business, which is their own little retail media network. This lets brands target Best Buy's huge customer base with, super relevant ads based on what people are buying and what they're interested in.
Oh, so they're using all that customer data they have to create a whole new way to make money. Pretty smart.
Very smart. And they're also putting a lot of effort into their third priority, making everything run more efficiently.
Okay, so less about the fancy stuff and more about the nitty-gritty of making things work better.
Yeah, pretty much. They're doing a whole bunch of things, from putting in an AI-powered customer service system to opening a new digital and technology hub in India.
So they're embracing automation and going global to become more efficient.
It's not just about cutting costs, though. They're also investing in tech to improve how they manage their supply chain, how they price their products, and, just make the overall customer experience better.
Sounds like they're really pulling out all the stops.
Yeah, they are.
But with all these new investments and plans, how are they managing their finances? What does their guidance for the next fiscal year look like?
That's a great question. We'll definitely dive into that next. All right, so let's get back to Best Buy and what they're saying about their numbers for fiscal year 2026.
Yeah, I'm really curious about that, especially after everything we've talked about so far. What kind of numbers are they throwing out there?
Well, they're projecting that their total revenue will be somewhere between $41.4 billion and $42.2 billion.
Yeah.
Which basically means for the whole year, their comparable sales growth will be flat to maybe 2%, with most of that growth happening in the second half of the year.
So sounds like a pretty cautious outlook, but maybe there's some potential for things to be even better if everything goes well.
Right.
But, we got to remember this guidance doesn't even include those tariffs.
Right.
That's still a big unknown kind of hanging over everything.
Absolutely. It's like trying to figure out the weather when there's a hurricane out there somewhere. It's going to have some effect. You just don't know how bad it'll be.
Good analogy. And what about their operating income rate? What are they saying about that?
They're thinking it'll be between 4.2% and 4.4%.
So it sounds like their margins might be squeezed a bit. Is that because of all the money they're putting into those new growth areas we talked about earlier? Or is there something else going on?
It's probably a mix of things. They're definitely putting a lot of resources into, stuff like the marketplace and Best Buy ads.
Right.
But then there's also, the cost of everything going up and the possibility of those tariffs pushing prices even higher.
So it's a tough balancing act, huh? They need to Invest for the future, but also handle the challenges they've got right now.
Exactly.
So what are they assuming will happen to make these projections work out? What needs to go right for Best Buy to hit these numbers?
Well, first of all, they're really counting on the computing category staying strong.
Makes sense.
It's been a huge driver of growth for them.
Right.
And with Windows 10 support ending soon, it's only going to get bigger because everyone's going to need to upgrade. Best Buy is in a perfect spot to, take advantage of that.
For sure. They're the go-to place for all things tech. And this whole Windows 10 upgrade thing, it's like a gift from the tech gods.
Yeah, pretty much. But they also need those categories that have been struggling, like appliances and home theater. They need those to at least stabilize. They're not expecting them to, bounce back completely, but they need those declines to slow down if they want to hit their overall sales targets.
Okay, that's fair. And what about those new ways they're trying to make money? The marketplace and Best Buy ads. How much are they factoring those into their predictions?
Well, they're expecting both of those to contribute positively. But, it's still early. It's hard to say for sure how it's going to play out.
Yeah, there's a lot that could go wrong. They got to attract sellers to the marketplace, convince brands to advertise on their platform, and then make sure the whole thing runs smoothly. It's a risky bet.
Definitely. And then there's the whole economic situation, with inflation still high, people not feeling so confident about the economy, and those tariffs always looming.
Right. So with all this uncertainty, what's your take on their guidance? Are they being a little too optimistic, or are they finding a good balance between being cautious and confident?
I think they're being cautiously optimistic. They're not ignoring the challenges, but they're also focused on the opportunities. They're investing for growth, but they're also being careful with their spending. It's a tough line to walk, but they seem to be doing okay so far.
It's interesting how this whole thing plays out time and time again. They've been through tough times before, and they always seem to come out even stronger.
Yeah, they're definitely resilient, and they've got a good track record of adapting and innovating.
Okay, so we've got a good handle on their financials and what they expect for the future. But how does this all fit into the bigger picture? What big trends are happening in retail overall, and how does Best Buy stack up against its competitors?
That's the million-dollar question, right? One of the biggest trends we're seeing is this whole shift towards omnichannel retail. People aren't just shopping online or in-store anymore.
Right, it's all mixed up.
Yeah, they're doing both. And retailers have to adapt to that if they want to stay in the game.
And Best Buy seems to be handling that pretty well.
They are. They're putting a lot of effort into creating a unified experience, whether you're shopping online or in a store, and it seems to be working.
What else is changing the game in retail?
Another big thing is how important data and technology have become. Best Buy is a good example of that. They're using all the information they have about their customers to make their marketing more personalized, price their products better, and even create new ways to make money like those Best Buy ads.
Yeah, data's changing everything. It's not just about having the right products at the right price anymore.
Right.
You got to understand your customers and give them what they want, personalized to their needs.
Exactly. And the third big trend I'd point out is how much more complex and unpredictable the global supply chain has become. Those tariffs are a perfect example.
Yeah, they're a constant reminder that everything's connected and retailers are exposed to all these global risks that can mess things up.
And those risks are only going to get bigger in the future. So retailers need to be flexible and adaptable and have really good plans for managing those risks.
Yeah. So given all these trends and challenges, how do you think Best Buy measures up to the competition? Are they leading the pack or playing catch up?
I'd say they're somewhere in the middle. They're not as digitally advanced as, say, Amazon,
Right.
but they're also not stuck in the old ways of doing things like some of those traditional brick and mortar stores.
So they're finding their own way, kind of blending the best of both worlds.
Exactly. They're playing to their strengths, like how well known their brand is and their loyal customer base, but they're also embracing new technology and ways of doing business.
Okay, so we've covered a lot of ground here. We've analyzed Best Buy's financials, looked at their guidance, talked about the big trends in the industry, and even gotten a little glimpse into the future. But before we wrap up, I think it's time for the part everyone's been waiting for.
You mean the "this is not financial advice" segment, where we let our imaginations run wild and come up with some crazy, but maybe kind of plausible trade ideas.
You know it. So let's put on our pretend hedge fund manager hats and see what we can come up with.
All right, game on. Remember that huge Windows 10 upgrade cycle we talked about?
Yeah.
Huge opportunity for Best Buy, right? But there's a catch, those tariffs.
Ugh, those tariffs. Always got to mess things up.
So how do we play this? Do we go long on Best Buy and hope they can handle it? Or do we play it safe?
What do you think?
I say we go big. We go long on Best Buy, but we hedge our bets by shorting a bunch of companies that are really exposed to those new tariffs.
Ooh, interesting. So who are we shorting? Give me some names.
We're talking companies in like apparel, footwear, maybe even some consumer electronics manufacturers. The key is to find companies that get a lot of their stuff from the countries those tariffs are hitting.
So we're betting that Best Buy can handle those tariffs better than these other companies.
Exactly. They've got a diverse supply chain, they're working things out with their vendors, and they can probably raise prices a bit if they need to.
Okay, I'm starting to like this. Classic long-short play with a little twist.
But we gotta spice things up even more. To really make things interesting, we're gonna add a long call option on Microsoft.
Microsoft. Why Microsoft? I thought we were talking Best Buy.
Think about it. That Windows 10 upgrade cycle is going to be huge for Microsoft too, right? They're the ones selling the software.
I see what you're doing.
Yeah.
We're making it a synergy play. We're betting that both Best Buy and Microsoft will benefit from this whole upgrade thing, and that those tariffs won't hurt them too badly.
Exactly. It's a bold move, but it could pay off big time.
I like it. This trade has everything. Long, short, call options, a connection between two big companies. It's like a financial symphony.
But remember, this is just hypothetical. It's definitely not financial advice, and it's not for the faint of heart.
Not for the faint of heart at all. This is high risk, high reward. You got to be okay with things getting a little crazy.
For sure. And with that disclaimer out of the way, I think it's time to wrap up this episode of TalkTickers.
Yeah, I think so too. We've covered a lot today. Hopefully everyone listening feels like they've got a better understanding of Best Buy, what they're dealing with, and what opportunities are out there.
Me too. And remember, this is just the beginning. We encourage you to dive deeper into anything that caught your attention, do your own research, and come to your own conclusions.
Exactly. We're just here to give you the information and insights you need to make smart investment decisions.
And with that, we'll sign off for today.
But don't worry, we'll be back soon with another earnings call deep dive.
Until then, happy investing.
It's really interesting how, like, Best Buy's whole story kind of reflects what's happening in the economy right now. They're dealing with inflation, supply chain problems, how consumers are changing, even global politics. It's like they're a tiny version of all the challenges and chances businesses have today.
Yeah, that's a great point. It's like they're right in the middle of all these big forces. And figuring out how to navigate all that, I mean, it could teach us a lot, even for businesses in totally different industries.
Yeah, it makes you realize that we're all kind of connected in this global economy, and what one company does can really affect a bunch of others.
Oh, absolutely. But let's not forget, Best Buy is also a story about being tough and adapting. They've made it through tough times before, and they're always looking for ways to innovate, to do things differently and better.
Right, they're not just like hiding and waiting for things to get better. They're putting money into new technology, growing their online presence, and coming up with new ways to grow their business.
Yeah, they're playing offense, not just defense. And I think that's a really important mindset for any business that wants to succeed in today's world, Things are changing so fast.
Yeah, that's a good lesson for investors too. Look for companies that aren't afraid to take some risks, adapt to the market, and set themselves up for success in the long run.
Totally agree. So as we wrap up our look at Best Buy's earnings call, what's the one big takeaway you think investors should remember?
I'd say it's this. Best Buy is a company that's changing. They're facing some challenges, sure, but they're also creating some really exciting new possibilities. It's a story about both obstacles and opportunities, and how well they do will really come down to, how effectively they put their plan into action.
Well said. It reminds us that investing is never a sure thing. It's all about weighing those risks and rewards, making decisions based on what we know, and staying informed about the companies we invest in.
And that's exactly why we do these deep dives, to give you the knowledge and insight you need to navigate the sometimes pretty complex world of investing.
We want to help you make good decisions and reach your financial goals. And remember, this deep dive is just the start. Keep digging into anything that caught your interest. Do your own research, form your own opinions.
There's always more to learn.
Yeah.
And the more you know, the better you'll be at making those smart investment choices.
Now, until next time, keep exploring, keep learning, and happy investing.
Thanks for joining us here at TalkTickers.